Good afternoon, everybody. I'm super happy to be here in Cyprus. It's actually the first time I'm in Cyprus myself, also being in the fintech ecosystem for quite some time. You can imagine that we've been talking a lot about Cyprus. As you can probably hear from my Czech accent, I'm French, but I'm living in Lithuania for years, which is also a very small country, which is also a country which gathers a lot of fintech, a lot of licensed financial institutions, so there are a lot of common points between the two countries, I guess. Anyway, glad to finally put image beyond just the jurisdiction. Thanks everybody for joining us today. We have, I must say, not a very gender diverse panel today, but still a very diverse panel in terms of background. So today we have with us Yiannos Ashiotis, managing partner at GRC Partners and member of the board at Revolut, which is a young fintech startup that you may have heard of in the past. So please welcome Yiannis for me.
Hi, great to be here.
Hi, Yiannis. We have Dr. Max Bernt, who is a chief legal officer at Blockpit and also a chairman at Accounting. Welcome.
Thank you very much.
We also have Simone Tamussin, who is VP of Global Product Development, Management and Development for the payment gateway services at Mastercard. Welcome.
Thank you.
And Demetris, finally, Demetris Taxitaris, who is the CEO of MAP S.Platis Consulting Services, who just had a talk before, one of the leading, maybe the leading consultancy services for financial institutions in Cyprus over here, right?
Indeed. Thank you, Alexandre, and hello everyone, and thank you for hosting us.
So thanks for being with us, guys. Good afternoon again, everybody. I'm Alexandre Pinot. I'm co-founder and head of innovation and strategy at AMLYZE. So today we've brought together many different experts from different backgrounds, as you can see. We have a lot of stuff to talk about. We've briefly approached compliance, regulatory requirements, and policies in the other panel. As often from a pretty negative perspective, I would like to brighten this up a little bit. We're talking about fintech and the future of fintech, and I often hear that compliance, regulatory requirements, policy in general is a boring topic to discuss off. I personally think it's super exciting. I think it's super exciting because first, from a customer experience, it is something which is extremely important. I mean, when you think about the onboarding, the way you verify your identity, the way you onboard your customer, that is a game changer really for any fintech. Whether you make it good or bad can make or break your experiences. And from a macro point of view, the way you deal with regulator, the way and the places where you will obtain your license really also is a game changer. So I think it is something which is more of a competitive edge rather than just a board. And obviously and hopefully that's something we're going to talk about today. But we only have 35 minutes, so it's going to be pretty short. By the way, if you have any question, please feel free to ask. It's going to be very hard to ask you to lift your hand over here, but you can use the app, the general chat on the app, and we can just check that, and I will select the question and ask it afterward. But let's dive in. And we'll start with a first question, which will hopefully help us to set the scene and give us a bit of background element. It will be for you, Max. Basically, we're wondering if you could give us a brief overview of the state of regulation for fintech. It's a super broad question, but maybe you can sum that up for us in a minute.
Indeed, a very, very broad question. Thank you, Alexander. I think you already mentioned regulation can be a competitive advantage, and I think that many countries in the world are starting to realize that, especially in the area of digital finance. So what we have seen in the past, and this is something which we know from basic economics, it was the US innovates, China replicates, and the EU regulates. However, when we look at digital finance, we now see something that we call sometimes the Brussels effect. Namely, they use setting certain standards from a regulatory point of view that is then implemented on a global scale. We saw that first with GDPR, that is now a gold standard globally. And we now see that also in many areas of digital finance, namely also in the area that I come from, crypto assets, with the markets in crypto asset regulation, now the whole anti-money laundering regime that is being implemented. We see movement in the US that a lot of players from their bigger crypto service providers are now eyeing towards Europe and the UK for more legal clarity and legal certainty. It's something that we have as a competitive advantage, definitely. Why? We see in the US, the SEC is enforcing an approach called law by enforcement. So the legal clarity and legal certainty for the service provider offering the services like for Kraken, Binance, Coinbase, etc. in the US is not always that clear because sometimes the SEC enforces law that is then proven wrong by the courts. Whereas we now in the European Union established certain regulation that should lead us to have minimum standards along the European Union. Also, we see trends in the Middle East, whereas Dubai has now implemented new laws also on the taxation part for companies. They want to become more transparent. They want to create greater clarity. Also, Singapore and Hong Kong are gearing up, implementing new regulation. So within digital finance, we see that regulation is now setting certain minimum standards that companies have to comply with. But also on the other hand, we have seen that a lot of regulation is a big pain, especially for startups, and that we see more consolidation with bigger players. So to give a broad overview, yes, we see a global trend towards more regulation, which also leads to harsher compliance rule, which ultimately leads to more costs also in the compliance departments.
Thanks for that, Max. Bouncing back on that and reflecting on all of you and your different experiences, what would be for you guys, you're operating in different regions, in different industries, what will be, in your opinion, the most impacting piece of regulation that is here now or that is upcoming in the next few months for each of you at the moment? Who want to take that?
Shall I start?
Yeah.
Okay. I usually say that compliance regulations are the gift that keeps on giving. And like I'm thinking about like the first thing I do in the morning, as we were saying before, like sometimes I know every 2-3 weeks there is something, a regulation popping out in a country that I need to address, and it's like, oh, now what do I do? So I work in the payment gateway space. So we had a few payment gateways here, and across 100 countries, 200 players that we support. And it's when it's a combination of frameworks or regulations coming together that have a multiplier effect. And that's the worst case. Like you can have like things that go from cloud management, like there's a lot of regulation that is going to hit cloud, data, on-soil requirements, and then like in terms of protection of the customers as well. We will talk a little bit later also about the trends that are happening like in geopolitical impact and influence. But that is like something that really when there's multiplier effect that it happens, and how do we tackle it? And we cannot do everything end to end anymore everywhere.
Thanks. Yiannos?
Yeah, definitely. I mean, there's not a single regulation that's going to be coming that's going to be changing everything, but there's a lot of different regulations that are going to have an impact in fintech. So I mean, starting from PSD3, that's that's coming. Definitely MiCA. I think MiCA is going to be groundbreaking because, just like Max said, we see that Europe now is coming at the forefront and implementing regulation and directives which form pretty much the blueprint for other jurisdictions to follow. But still, I mean, even with these kind of regulations that are definitely going to be kind of solidifying crypto as a main form of both investments and payments at the same time. So that's going to be an interesting ecosystem that's going to be developed there. Again, that's just going to be the beginning, because with any regulation, it's not the implementation. It's basically what's going to follow up, because you're talking about financial instruments and tokens, which is effectively money, and you're talking about utility tokens, and how everything's going to be interacting is not something which is basically described in MiCA. It's something which it's going to be explained by trial and error through a lot of enforcement, like Max said. So effectively, there is a lot of different interactions and interrelations. And then again, you have, through MiCA, the categorization of some cryptos as payment instruments, right? As money. So how is that going to be facilitated in the payments industry? So there's a lot of things. There's a lot of things that is going to be interesting. 2024 is definitely going to be very, very interesting in the years after that.
Thanks. I think it's a very good point that you mentioned, and I think that's also something we should never forget, that regulators are also human, and that the time it takes for them to adopt regulation, but also understand regulation, is pretty much the same as for us. And a very good example at the moment, I will say, well, on top of just crypto, which for some regulator and supervisor is hard to understand, is the banking as a service model. The distributor and agent model exists for pretty much as long as electronic money exists, but the way the supervisor sees it seems like they're just trying to understand the challenges and the risk that this type of intermediation are basically implying, and that's surprising because it's here for years as well. And I think it's the same for pretty much every piece of regulation. We're often ourselves, market participant, financial institution, scared, concerned as to our possibility to practically implement this regulation, but the regulator are also taking a lot of time to understand it. Demetris, anything to add?
Yeah, thanks, Alexandre. I think by far the most important new law or regulation coming into effect next year would be MiCA, in my view. It's interesting to see how we moved in the last, let's say, 1.5 years in the cryptocurrency and crypto asset space. I remember back in 2022 in June, probably, if I'm not mistaken, there was a paper issued by ESMA explaining the situation with cryptocurrencies and where we stood at that point in time, how big the industry was, how big the market was, outlining the biggest crypto exchanges, their estimated volumes versus the New York Stock Exchange and other big organized markets globally, and explaining that the market is still quite small and non-systemic at a global scale and doesn't pose a threat. I remember the terms used, doesn't pose a threat for the global system and the traditional banking system. 2 months later, FTX, or 3 months later, FTX went bust. And everybody got in a panic mode. Remember all those titles coming out on a daily basis, every few weeks, and the news coming out and the impact, obviously, on all cryptocurrencies, effectively bringing a winter for some time, for a few months. Then obviously the whole saga with FTX and the saga with Binance in the US, which kind of ended a few weeks ago with the decisions taken there. Eventually, I mean, we are at a juncture where, we are past the whole thing with Binance after a $4.3 billion fine by the US authorities. And at the same time, having the Bitcoin up 150% year to date and being the best performing asset this year across all asset classes. So wow, I mean,
Speak of paradoxes.
There's been some ride, and a lot of people are currently arguing even that we are getting to the next cycle in terms of cryptocurrencies.
So it's probably a good proof that, once again, we're weak humans and we need failure probably to realize that regulation at the end of the day might be useful and...
No, I know, and I think you've nailed it there, because what's important to note is the impact of regulation and the fact that all this market and the cryptocurrency market will become stronger through regulation. in the end of the day. And I think the US authorities and the SEC wanted to make a point there. They wanted to impose a hefty fine to make a point to all others, to send a message across. And I mean, even after that, a lot of people are saying, and I've been also talking to people telling me that the SEC has again been processing ETF applications. There are, I don't know how many, 10, 15 ETF applications in the US. And they started again talking to people, and they've created again the anticipation that probably an ETF will be approved in the US after all, and having institutional US money flowing in. So this creates another anticipation in the US, and is obviously a driving force behind the higher prices. But at the same time, looking at MiCA coming in mid-2024, I think a lot of people are waiting for that. A lot of people are anticipating to see level 2 and level 3 measures coming out, because we've only got level 1 at the moment, if I'm not mistaken. So I think the whole market is expecting to see what's going to come out, and probably we shall see a number of new applications coming in my view.
Thanks.
Now, I want to stop by saying that I'm not sure if the regulators are ready for that. And this remains to be seen, because a lot of the regulators within at least the European Union are geared towards the institutional part of the business.
We'll have a chance to talk about MiCA, and we will talk about it more, but now a quick drift to regional expansion, because this is obviously something which is super important for fintech. We've seen many companies here that have grown through regional expansion. When you want to expand regionally, obviously, from a regulatory point of view, that means licenses, that means exploring new environments, new jurisdiction. That's a question for you, Simone. We've talked about it while preparing this panel discussion. Do you think that there is a new kind of regulatory protectionism developing, at least in some region, that will be aimed at protecting some specific domestic ecosystem, possibly from foreign interference? So basically, do you need to have a local establishment necessarily, or local presence to exist as a fintech or to operate as a fintech?
No, definitely yes. It's massive, and it has accelerated, to be honest, after also the war with the sanctions that were applied, because then a lot of countries said, like, okay, what about, like, regulation sovereignty? Like, how can we make sure that we are protected, we protect our customers, and we are not dependent on someone else? So to give you some numbers, like, we are monitoring, of course, all the countries globally, and there are more than 100 countries that either have a domestic scheme or instant payment solution that are being deployed, and we expect another 30% increase of these countries. And in each of these countries, we see at least 4 forces that are coming in place. Like, one is pushing like new ecosystems, another one is regulators that want to have tighter control. Then there was like a discussion about like all the frameworks, the new solutions. How do we regulate them? How do they make them work one together to the other, and interoperability. So this is completely changing the approach, and for us it means that sometimes, like, the worst case scenario, as I mentioned before, is like if you need to go completely on soil with new solutions. And not only yourself, your stack, you need to go on soil, but if you need to work with specific players that are being certified, approved, or are the only one that can operate in the country. So this is, at the same time, an opportunity for some of the smaller companies, because the cost could be pretty high for small companies, but they could be even higher for the incumbents. And if you are a good player that are based in a local regulated country market and are able to deploy your services and open them to other players, the opportunities could be massive. Me, myself, I had to completely review my stack, my technology, and try to be open to play and operate with different players in different regions, because I cannot do that anymore end-to-end everywhere.
So we talk about globalization and consistency, but in action, it's actually a very...
It's basically impossible. Like, it's impossible to have one player that operates everywhere. Absolutely.
So back to MiCA. We started to talk about MiCA, and that's actually a very interesting topic indeed, because there are a lot of opportunities. to me, having this kind of clarity, even though MiCA is indeed complex in terms of standards, very strict and solid, I think it opens a lot of doors, specifically for EMIs. There are now new provisions for EMIs as to the possibility of starting directly under their licenses, their current EMI licenses, to offer crypto services. You've been working with Revolut for some time. Do you think we will see in the coming months a change in the structure of the licensing of Revolut, and possibly Revolut repatriating their crypto services back under the roof of their EMI license?
No, I don't think this is something that's going to happen. Now, obviously, I can only talk about the crypto arm of Revolut Digital Technologies. But basically, I think that believe it or not, Revolut is a pretty conservative company. I mean, if you look at the business model, they never rushed to go into any jurisdiction where there was no regulatory clarity. I mean, they waited to enter the Middle East until after VARA was implemented. In the US, you see that, I mean, they kept like a very careful distance. So basically, Revolut takes compliance very, very seriously, I mean, at the group level. And I think that they really want to keep these regulatory silos under, different licenses. So for example, I mean, they have their different services coming out of different licenses, and I don't think that they're very keen in kind of consolidating everything under a super license, even though, I mean, potentially they will have the ability to do so. And I think that this is going to be a recurring theme. But even with MiCA coming about, I don't think that from any company's a risk perspective, it would actually make sense to kind of try and house everything under one roof. Because now you have different regulators. I mean, you mentioned EMIs coming into the game under MiCA, but look at what MiCA says. If you're an EMI and you're basically issuing an e-token, if this e-token is significant, you know what? You're not going to be regulated by the local jurisdiction. You're going to be regulated at the Frankfurt level. So basically, now you have you have the Champions League, and then you have like the local leagues, right? So basically, I would guess that most fintechs will try and establish a very, very solid local presence. And if they do that, I don't think that they would really want to involve, the highest level of regulators into their operations, which is the ACB.
Yes, I was going to bounce back to you, Demetris. We've discussed that before, and I think there is this very interesting momentum whereby, from a regulatory point of view, you can do a lot of things, but a lot of companies are in a kind of wait-and-see momentum because nobody actually understands the implication of actually starting to do that. So practically offering crypto services under the roof of your current license. Demetris, we've discussed about the fact that not only EMI could offer crypto services, but also investment firm under MiFID licenses. And you mentioned something super interesting, which I understand is happening in Cyprus, but also in many other EU jurisdictions, which is the fact that also MiCA kind of opens the door to crypto. Many regulators in Europe still do not accept it as such, and still put a lot of scrutiny, if not even rage against the company that would start offering it. So how do you see it can play in Cyprus? Do you see a MiFID license company going for crypto or rather staying away of it for the moment?
Well, exactly, Alexandre. And we were talking, as you said, we were talking about this earlier, which is an interesting topic. First of all, I would like a remark about EMIs and PIs and the possibility of extending into crypto, let's say, once MiCA comes into place. And adding a different perspective, an interesting perspective, which is that despite MiCA comes into place, a number of central banks within the European Union do not favor actually cryptocurrencies. And even some of them which have licensed EMIs or PIs, they have noted within their terms of licenses that they will not be operating in cryptocurrencies. So there's a clear deviation in policy there between different regulators in different jurisdictions, but also different regulators within the same jurisdiction. Even banking regulators and financial regulators often deviate in terms of their approach with cryptocurrencies. So that the potential and the possibility of EMIs going into crypto is still a question mark in my mind, and will depend heavily on how banking jurisdictions, banking regulators will approach this matter in the coming months or years. I must say that I've been speaking to a few banking regulators, including a few at the highest level, and I haven't seen any tendency or any appetite to change their approach in terms of crypto yet, at least. Now, financial regulators are different. I mean, even from our side, we helped a number of investment firms like 6 years ago to get licenses to operate in cryptos, while MiCA wasn't even on site, and that was under their investment firm license. So they did that, 5 or 6 in Cyprus, and they've been operating in crypto ever since. I mean, obviously, there's around 250 investment firms in this jurisdiction, if we're talking about Cyprus, and I think a number of them, the bulk actually, 150 or so, operating as CFDs brokers. So I would assume that they would be interested in looking in this space, and they would be interested in applying, at least most of them. I think there would be some risks there in ensuring that, you know, some risks coming over from the crypto business into their existing business, but I hope that the local regulator will introduce certain safeguards to ensure that there would be no spillover effects, and they are also subject to prudential supervision, which guarantees that, you know, in a way, their capital will be kept at the minimum possible.
Thanks, Demetris. It's a good segue to a next question, still related to consistency in the...
Alexander, maybe can I quickly jump
Yes,
in, just
sure.
because I had some points that I caught up. So, MiCA, I like the comment that there's humans at the regulator, same as in the industry, right? For the past 3 years, I've been really closely working with the European regulator on MiCA, amongst others, the new AML package. And what I've noticed is a trend, especially in the area of digital finances, these are often very complex topics, that there's getting a closer and closer public-private partnership. So they're really interested also to get practical feedback. And I think this is something which is really reflected in the latest regulation that has been negotiated in the European Union. Most of it is actually pretty good. I mean, MiCA originally was MiFID copied and pasted. And adapted to crypto, and then there were some you mentioned before the issue of systemic risk. This was actually something we had really intense discussions about, because this was a huge argument, because if crypto would have been qualified as a systemic risk, this would have laid the groundwork for different regulation within the European Union to be taking in a faster process, which would have been an issue for crypto as it is. We see that with the SEC, and their law by enforcement in the US. However, what we should also keep in mind when we look in the United States, that there is a lot of politics also involved into the actions of the SEC. So when FTX, for example, happened, it was published that there were a lot of politicians being involved into the FTX scandals and actually taking money from FTX, using that for their fundraisers, etc. So there's a lot of politics there involved as well, and politics are often something that you don't really keep in mind when evaluating action by the regulators. Then the next thing is that we see when we negotiated MiCA and in the drafting process, and something, the most important questions that we raised, what should it even regulate? I mean, MiCA is pretty broad, right? It's a regulation, so it's a harmonized framework. It's not like MiFID or the directive, the payment directive. So it doesn't have to be transposed into national law. It's law that is directly applicable in each and every member state of the European Union. Therefore, it creates a minimum standard. And what should it regulate, what shouldn't it regulate? And then there were questions of NFTs, of decentralized finance. Should that be regulated in MiCA, yes or no? And what we saw is that the regulator still wants to have the space, give the space room for development, which makes sense, and which was also something that we see right now in the European Union. On the one hand, we have legal clarity. On the other hand, we also have room for tryout, so to say. Well, it's something we see, for example, with our sandboxes that we implement, or the DLT pilot regime. However, and then again, from speaking from practice, there's actually not been many companies that applied for the DLT pilot regime, even though it would give you a lot of options to try out new things, so to say.
So it's a very good point. MiCA is a regulation, not a directive, so it's being implemented in theory the same way everywhere. Now what may differ is the enforcement in each and every country. So we'll see how that works and whether there are countries which are enforcing it in a more flexible way than others. And it brings me to another question on the consistency of the regulatory requirement across the globe, but also on the willingness for regulator to go in the same direction. What do you think, Simone, at the moment? You're working with different jurisdictions on different projects. Is there a willingness from regulator to go in the same direction at the moment?
So yes and no. There is definitely, like, especially in areas that they don't understand, they're looking, as an example also, we scaled up a huge team to support all the different countries, all the different regulators to just explain, to try to get to a same type of definition. An example, digital assets, what can be managed and processed by banks and what can be considered a payment. How do you protect your consumers? So we try to influence from that perspective, and like initiatives like MiCA, to be honest, are seen quite well from our perspective, because at least they give like a starting point that then you can bring the discussion in other countries. But it's not only, of course, crypto is like again, in a worse situation probably than the rest. It's everywhere in the payments, because each regulator has a different way of interpreting like payments, what needs to be in the country, how they protect the consumers, and also how they create interoperability. And also, it gives me like a comment that I heard in one of the panels before, where regulators, they don't drive innovation. I could challenge a little bit that in some countries. As an example, we mentioned PIX, that as Mastercard is not something that it's a combination of a threat or an opportunity. This was completely driven by the government, if you want to see, or like in India, if you look at the UPI, how India is pushing really hard on that in that front, is completely changing the ecosystem. So going back, a lot of different interpretations. Things are changing a lot in the last years in each country, in each region. There are also like coalitions that are starting to form there, a little bit of geopolitics that are happening, but definitely like there's an appetite to get to the same type of understanding the effects across the board. And we, of course, we try to support as much as possible.
Thanks. So let's see how that plays. I see we're actually running out of time. So a last question to you, Yiannos, before we go to our closing remark. It actually went much faster than I thought, to be honest with you. But on banking as a service, we've briefly talked about banking as a service in the recent months, in the last few months, actually, in many different countries in Europe, even in the US. Actually, we've seen the regulator coming hard on banking as a service provider. There was Solaris Bank in Germany, Raise Bank in the UK, but also in Lithuania, Modular, Goldman Sachs in the US. So clearly, something is happening in terms of regulatory scrutiny and banking as a service. What do you think it could mean for the future of this type of business model?
Well, as a business model, I mean, it's very lucrative, right? I mean, based on a report, this is an industry that's expected to have transactions of about 7 trillion by 2026. So you're talking about the huge industry. Now, obviously, what is software as a service? I mean, banking as a service, right? I mean, effectively, you have the fintech that interacts with the client, and then you have the provider of the banking service at the back. So if you conceptualize this is a layer. Now, anyone who's in compliance will tell you that, I mean, layering, it's one of the ways that criminals are using to hide proceeds of illegal money or to facilitate transfers for illegal purposes. And I think that this is exactly what the problem is here, that if you're going to be providing this kind of service to any kind of fintech, that most of them will be unregulated, it means that as a regulated bank or a digital bank, you need to have the corporate governance arrangements, the regulatory arrangements in place, the anti-money laundering arrangements in place that are going to allow you to have a very, very strong degree of certainty about the kind of transactions and about the kind of clients that you're facilitating through your system. And this is what happened. You have basically something which exploded over the past couple of years, and the regulators realized, and mind you, the regulators will always take some time to realize what's happening, right? So the regulators realized that it came to a point where a lot of the providers of this service didn't have the compliance and the regulatory ability to monitor who they were onboarding and what kind of transactions they were doing. So it's just a matter of the regulators being, I'm not going to say proactive because basically it has already happened, but the regulators realizing what has happened and basically coming in with enforcement, and this is a key word that I like, the word enforcement that was mentioned by Max at the beginning, but they come in with enforcement to kind of hold everything back until they kind of give more guidance about the stricter regulatory framework for those banks or digital banks, so that they're going to have the ability to monitor the transactions and the clients of the fintechs. Their clients are basically facilitating to use the banking system.
Yeah, indeed. They realized that many banking as a service provider did not know the clients of their clients. And that was indeed a big problem. Yeah, Max, one remark and maybe a closing remark after that. And we'll go with each of you guys.
Okay, perfect. Just maybe to keep that very short, but what we're seeing right now, and this is also towards global regulation and global enforcement, regulatory enforcement in general, is that the main economic powers globally, namely OECD member states, are now setting certain standards and becoming really strict in their enforcement. Compliance standards in AML, tax standards, licensing standards are becoming harsher and harsher. So there is less and less states that would kind of act as a safe haven for companies to go to and then operate via regulatory arbitrage in the countries with stricter requirements. So I think towards getting back to what we started with, namely the topic of this panel, state of regulation, what the future holds. What I see for the future is that in general we will have stricter regulation as we see right now with the regulation in place. We will have global minimum standards. I think there will be less and less places that would be considered safe havens. I think that there is a big tendency, especially in the OECD member states, to prevent a race to the bottom. And that's also something in the European Union that we saw, especially in regards to taxation. And it's something where I see also, for example, Cyprus and Malta being kind of pushed towards a direction, or also the Baltic states, where they would implement harsher AML requirements so that they would be seen as cleaner towards the other member states as Germany and France. Because right now, it's not that simple to have a crypto startup, for example, in Cyprus and then operate in Germany. Mostly because the German BaFin would say, why do you register in Cyprus? It's because you want to avoid our requirements. So ultimately, I think that the standards international will be increased, which is not too bad, and which are also a requirement for mass adoption. For example, in the area of crypto assets, regulation, for me, is the main prerequisite for mass adoption. Because ultimately, we need to safeguard the individuals that deal and that use that technology. And the technology, as it's built peer-to-peer, the responsibility lies within the individual, and often that's an issue nowadays.
Thanks, Max. Demetris?
So just very briefly, because I'm aware of time, what the future holds? Well, the future will not be uniform in terms of regulation for some time. I think financial regulators within Europe, and this is from own experience and from speaking with some of them on behalf of clients, financial regulators do not approach in the same way MiCA. They do not understand it in the same way. They don't have the same experiences, let's say. MiCA, crypto assets have to do a lot with complex products, specific risks with, which have to do with retail investors mostly. Not all financial regulators will be ready on time, probably, and I'm not talking about having applications ready, but understanding the concept and the business and being able to address all risks. And I think certain regulations, such as Cyprus, having addressed the AML part, will be in an advantageous position, taking into account the market here. It remains to be seen how things will shape out in the future.
Thanks. Yiannos?
Yeah, I totally agree with what Max and what Demetris said. Basically, the future is going to definitely it's going to be very interesting. I do believe that we are going towards a convergence of the financial of the crypto regulatory framework, at least. So at least for the first time ever, we're going to have some common understanding. Regulators, again, will find it challenging to try and find the little idiosyncrasies of each application of MiCA. But I think that, the implementation of MiFID was a very, very nice test, was a very nice experience for the financial services sector, at least in Europe. So I think that considering that we do have an ecosystem of compliance professionals, at least in Europe, that can pretty much guide clients and guide companies to the way forward on how to be compliant and how to navigate safely. I think that everyone has to gain, which is what Simone said at the beginning, that regulation is basically here and it's going to be good for everyone.
Thank you. Simone?
Listen, I'll just give a recommendation. If you're a payment company, a fintech, you need someone like Max or Yiannos in your team or working with you, because if you don't get it right, the regulators often don't understand the full ecosystem end to end. With PSD2, we've seen it, especially on the merchant side for EMV3DS. I think it was a bloodbath from the beginning. They just didn't understand that. And sometimes, if you get the wrong, recommendation or understanding, the impact on your company will be really big. So I had to give a few times, my legal counsel, to ask them to change a law firm that was consulting for us, because they even didn't understand our business and were giving the wrong recommendation, and that would have had really massive impacts on our business model. So make sure you spend a little bit more money, but spend it right to get it right.
Thanks. So we have a casino next to. We can register the prediction and the bets and see in 5 years what actually happens. I think on top of just the regulatory requirements, which are going to change and evolve anyway, the approach of regulator is super important as well. And to end up on a positive note, the dialogue, discussion and exchange between the regulator and market participant, in my opinion, in many jurisdictions is going towards something better. So hopefully that will continue. There will be more exchange and more dialogue, and we can work this way. Thanks everybody. I think we're way past time, but thanks anyway. And see you soon.